Oh, actually, yeah.
I just pressed it.
Oh, that's
So
okay.
you're
Oh,
live.
so we're live.
There you go.
uh,
All right,
oh
I'll be
my
back.
goodness.
And we're live.
Yeah, we're live. We got a little wisecross there. We're all good. I just want to get some water because I know I'm always going to need water because whatever, I get frogs in my throat. Anyways, Luke, what's going on, man?
Not too much, buddy. What's happening?
Oh, not too much. Not too much. Living the dream, doing some podcasting, some live
Yes,
streaming.
sir.
So I
Aren't
love
we
it.
all?
Yeah,
We're
yeah.
alive. We're happy.
Yeah,
We're living,
exactly.
right?
And so, and for me, somewhat healthy.
Yeah.
I don't know.
Well, it's subjective, right?
Subjective, yeah,
Yeah.
exactly. All right, man. So let's talk money because it's something that's near and dear to pretty much everybody.
Yeah.
Kind of has to be. And there's been some crazy stuff that's been going on in the market the past week or so. I don't know if we're gonna get too deep into that, but it kind of spurs us thinking about like the mindset of an investor and what does it mean to be an investor and what kind of like how do you have to think about money. So maybe we'll just start off real quick, and I just love to ask you like, what's your like as an investor, because that's how you primarily make your money all through investing. Like, what's your mindset and how do you approach it?
Yeah. Well, it's an ongoing job, right?
Yeah.
Like we can dice it down to like, you know, so it's like the psychology of money, which was one of our big topics that we're kind of like hitting on here, and it's, you know, to be an investor, the psychology you have to get. I think you have to kind of strip it down and figure out the psychology of money alone and what money means to you. And it can mean a whole lot of things to so many different people, right? It's the craziest drug in the world, money.
Yeah.
The pursuit of money, wealth. It can be really, and you can get really lost in the pursuit of it,
Yeah.
right? Because you know it's one of those things that you need for survival.
Yeah.
But at the same time, an abundance of money can create a lot of problems in your life, right? So I think trying to figure out what your purpose for money is, and I know that's a loaded question or a loaded topic, but really you have to start there, because if you don't get right with how you feel about money and what your money needs are and what your purpose for money is, then you can't even think about how you're going to set your mindset up as an investor.
Are you talking about beyond the basic need, your basic needs, or does that even include that? You know what I mean? Like a lot of people now, they're just stuck at the point where like, I just don't even have enough money to pay rent and buy groceries.
Yeah,
right?
I mean, it all comes down to that, right? But I mean, like it all starts off at the beginning, like, you know, like we all need money and we all want money. I don't know too many people out there that wouldn't take money if it was given to them. You know what I mean?
Yeah.
So, but it really comes down to like, you know, the purpose for that money. Like, are you trying to accumulate assets? Are you trying to, you know, build the business? Are you trying to accumulate wealth? Are you trying to have enough money to just make your ends meet and that's it? Like, it's almost like you really have to have a set, like a fixed mindset of like, I want money for X, Y, Z, and stick to that, because if you don't, you're going to get lost in the money trap, right? Because money is a drug, and there's really never a ceiling on how much money you'll
What
want.
you can make. Yeah. We'll
And-
talk about that in a sec here. Yeah. Kevin, how's it going, man? Great to see you
Hey,
in the
Kevin.
chat as always. I make more money and feel like I'm still struggling equally. I never feel the increase in my pocket. I'm bad at maintaining lifestyle as income goes up. So that's an interesting point too. Is that lifestyle creep where you hear that where, you know, you have a certain amount of money and then you are at a job or what have you, get a raise, right? Oh, and all of a sudden you're making $10,000 more money. And for whatever reason, the lifestyle goes up an extra $10,000. Oh, now I got more money. Maybe now I need a new car, or maybe now I need nicer clothes, or I need that fancy watch. And then you're always kind of, like Kevin's saying, like almost like you're stuck. You're still like not seeming to get ahead.
Yeah, well, this is kind of what I'm trying to unpack here, because, you know, is it a lifestyle that you're craving? Like, do you want money so you can have a particular type of lifestyle? Like, that's a purpose for money, right? Before you can even get into thinking about investing, because you have to understand what you want. Like I want, for me personally, I want a certain lifestyle,
Right.
and my lifestyle, and I feel like I've achieved it, but I'm at a point right now where I'm dealing with the equation of I have what I always wanted, but now I'm yearning for more, right? Like now I'm thinking about how do I move, and it happens to everybody. It's human nature.
Like
that-
you're thinking more money in the bank, not
well,
necessarily.
no, I'm thinking about how can I upgrade my lifestyle. Like
Okay.
once you reach a certain lifestyle, then you're thinking, how can I how can I improve my lifestyle? And what me and my wife are trying to do, we're trying to grow our lifestyle not parallel to our wealth. We're trying to grow our wealth, you know, larger than our lifestyle. So if our, for case in point, if our wealth grows 10-15% and that's sustainable, then I want my lifestyle to grow about 5%.
Like 5%.
Like I want to make sure that
I see what you mean.
my wealth is exceeding my lifestyle.
So like you're not going to get trapped in like what Kevin was saying, where you make an extra 10%, but you're spending 10%, 11%, 12, and you feel like even though you're making more money, that you're actually getting more and more behind because you're not.
Well, I mean, it's a case in point with like you see it all the time where lifestyle grows faster than income, right? And I think that's a big issue with people because, you know, there's a lot of lifestyle increases where there's very little value being created. Hence, where do you really need the, you know, the next level vehicle? Do you really need the, you know, do you need to upgrade the house? Do you need the 5-bedroom house instead of the nice little bungalow?
So why do you think, why is that? Let's dive into that, because are we just always looking at our phones and looking at social media and looking at what other people have and thinking that I need to have it too, or feel like maybe I'm missing out on, you know, we're not American, but like the American dream, which is pretty similar here in Canada as well too. You know, like, do we just see the neighbors and the Joneses and say like, we have to have that as well too? Like, what is it that's driving us to want to always increase that lifestyle?
Yeah, that's a big component of it. I just think that when we're at a place in life, call it when we're at a lifestyle, I believe that eventually you get used to it. You know, your excitement about it. You
establish a new
you
baseline.
be stable. You're at a baseline, and you want to, you know, you need more dopamine. You want to increase your lifestyle. Like I bought a new car 2 years ago, and I'm already thinking, well, I would like to upgrade my car, even though I don't want to. I'm very comfortable where I'm at with my vehicle, but those thoughts are running through my head. And
so what are those thoughts? What exactly is it about your car specifically that you want to upgrade, or like what's missing? Like, what are you thinking?
Oh, I want to just like I wanted like a nicer vehicle. I want a newer vehicle. I want to change.
You just want to change for the sake of change.
I'm just used to my vehicle. I'm craving a change.
So it's just a change. Interesting. For me, it's like we say yes to more things. The kids' baseball travel team is 4K. Is that 4K a month or 4K in the year? Hopefully it's not 4K a month, because that's crazy. But yeah, I know baseball, like sports can get expensive. Like here, hockey can get really expensive. Children, yeah, exactly. Yeah. But now we say yes and may not have 3 to 5 years. We say yes and may not have 3 to 5 years ago. Yeah, per season. Okay, so that's not as bad, but it's still a lot of money. $4,000. I mean, that's you know, a couple $100 a month at least.
Yeah,
right? So
well, I mean, it's.
Is that a thing? Sorry, just real quick. Mm-hmm. Is that something that happens when you start to make more money? You almost think that you have an abundance of it, so you kind of be like, oh, okay, we can do that. I find myself like even running this business, and it's like, oh, things are going well. I'm making money. It's like, okay, yeah, sure, I'll go buy this new thing. I'll go buy that thing. It's not necessarily buying stuff for me because I want it to increase my lifestyle, but I buy things to try to make the studio the best it can be. Then I realize, oh shit, I've spent $3,000 more than I made. You know what I mean? Because it's almost as if it's my mindset is like, oh yeah, I'm doing fine. I could just go ahead and spend. So it's like you got to have that discipline almost to look at the budget. You know?
I know that is the case in point with most people. For me, it's not, because I'm one of those people that is like, I have to learn how to spend my money, which is like, you know what I mean? It's kind of like obviously counterintuitive to the point we're trying to make. But I'm the type of person that almost have a little bit of scarcity to money. Even no matter how much I make, I still feel like it can be taken away from me very quick, because like I said, I owned a property for 16 years, and that really did a number on me, because that house was just robbed me of my joy, and robbed me of my money all the time. So I know how quick money can be taken away.
So you've experienced that loss, so it makes you a little bit more.
Well, yeah, I'm just very, I'm just very scarce when it comes to like upgrading my lifestyle, because like I always feel like I need to have a certain amount of wealth before I can start increasing my lifestyle. Mm-hmm. So with that being said, I have to learn how to like, you know, but at the same time, you only live once, right? You have to be able to enjoy your money, which is a big, you know, and I know it sounds crazy, like, oh, if I had an abundance of money, most people would just spend it. But I want to make sure that my wealth lasts lasts me, right? Because I'm, with it being in the markets, nothing is guaranteed, right? So it's great to be able to live free and live off the markets, but at the same time, you always have to be prepared for when things can go south.
Yeah, and that's I think that's a really big distinction because all of your money is in like the market, like that's your job in a sense, right? So like you have to be careful because like other people, if they have a job, they lose their job, they're screwed, but they can kind of get another one. But I mean, it's the same thing for you. If the market goes down and you lose your income, then it's like, what am I going to do now, right? So I think you strive really, really hard to protect it because you don't want to, I'm sure, go out and get a job or whatever if something happens in the markets, right?
So I never lose my income. I just, when the market goes down, my portfolio value goes down.
So the value of the portfolio goes down, but your monthly draw is still the same.
My monthly income always stays the same. It's just nobody wants to see, the value of their business be, 30-40% less because that needs to sustain my income, right? But that's the nature of the beast. I'm a long-term investor, so I have to be able to live through, the ups and downs of the market. But I also have to be very cognizant of like how much I'm willing to spend. I know there's a lot of people, they could look, say if I'm making, $20,000 a month in income, that doesn't mean I have $20,000 to spend. A lot of people just go and just spend all that income thinking that, well, I'm going to get $20,000
or it'll last forever.
It'll last forever. No, like I have to make sure that I'm spending, I want to make sure that my margins are safe, that I can spend also withstanding a sharp or a long duration market crash.
Yeah, like
which I will have to.
With your portfolio, this is going maybe a little bit too into the weeds, but I just want to ask this real quick. Is there any risk of, you're saying, if the value of your portfolio goes down, then all of a sudden, it's worth 40% less, but you're still it's still paying out at the set amount that you're getting a month. Is there a risk that if the market is downturned for a significant amount of time, that monthly income you're going to get is going to go down with that?
No, but so you have to understand though, my income is getting paid out of my portfolio. So case in point, we go to a bear market, we're down 30%, and I'm extracting 5% to live out of my market. Then I'm actually down 35% that year because I've already extracted 5%.
Okay, so it does.
No, I'm extracting from my portfolio.
Right.
So that's the thing. I like the biggest thing with like dividend investing and cover call ETF investing. People think it's cash flow. It's not cash flow. It's a way to invest in the markets, into indexes and products, and it's an extraction process. So it's for people that want to live off their portfolios. And what these do is they pay you out in monthly distributions, and you can either reinvest them and keep it a pure growth portfolio, or you can spend your income and invest half. And these are designed for people that don't want to have to like sell into the market every time they need money.
Right.
It does the extracting for you.
It does it for you. So theoretically, though, so I went into the weeds here. Theoretically, if there's a bear market and you have to extract, and then you're extracting more, then I guess that's putting in it. Like you could run out, theoretically.
Well, the market would have to go to zero, right?
Okay, so as long as the market doesn't go to zero, like I'm saying, if it was a bad market for like 10 years, never gonna happen. But if it was, could it theoretically, if you keep on extracting,
theoretically, I mean?
Theoretically,
if we go, if the market goes to, you have to think about like this. If I'm extracting 5% a year out of my portfolio, then my portfolio value is going down 5% per year. But history has shown that the market goes up 10% or more a year, right?
On average.
So the thing, but you may have your you may have your bad bear markets like 1 to 4 years, but then hopefully, and if it doesn't, then we have more of a serious problem, right? You know what I mean? So I'm at a point right now where I would never ever take me and my wife away from our job if I wasn't at a place where I felt that I could weather any storm. And and if there's a storm that I can't weather, it would be because the world is ending.
And then
that's where I'm at. Like, I made sure that my portfolio is at a level that I'm comfortable to be able to do that.
You look at the history of the stock market and be like, it's never, like, you almost project like, what is the worst case it could ever possibly be, and know that you can still survive that.
And we've had lost decades, and a lot of people want to reference, you know what I mean? Because I am a student of history, and there has been decades where there's been no returns. But however, I do dabble in trading.
Yeah.
You're right. That's secondary to my business. And hopefully within those 10 years of like, there will be amazing trading opportunities.
Yeah. Yeah.
Nothing's guaranteed, but at the same time, my lifestyle cannot improve. Like me and my wife are wanting to, like we talk about this, like, and like you're saying, like, we would like to have a nicer place to live. We would like to have a bigger space. We're living in an apartment right now, but we love the fact that everything is a fixed cost.
Yeah, for
we know
sure.
exactly how much we need every month. We know how much we're taking in. We're very comfortable, and that's beautiful right now.
Yeah.
And I keep saying, we have to keep saying to one another, not until our wealth is doubled before I can even think about upgrading my lifestyle. Like I would have to see my whole net worth double before I even thought about doubling my rent or doubling, getting another vehicle. You know what I mean?
So tying this back to your vehicle then, is that going to stop you? Like, is your mindset, are you disciplined enough to say
Yes.
that, you know what, I would like a new car, you're having that itch, but you're not going to act on it?
No,
until-
no.
Okay.
No, because the
yeah.
best, when it comes to vehicles, like if we're going to talk at that point, like you
Or
don't,
it could be anything. Like somebody's listing this, they might be like, oh, I just like to buy, they have like a crazy Pokemon collection that, those cards are thousands and thousands of dollars or whatever the case may be. Like it doesn't necessarily have to be a car, but just something that you don't need, but you kind of would want to have, that would be like, hey, this is to another level of status that I would have, right?
Yeah, so where I've come over the last few years, I have to have like a value scale of anything, of any type of big purchase. There has to be some sort of like value that it creates for me to be able to even think about making a purchase. Like it has to be able, like, if it's going to bring me, create a lot of flow state in my life. Like, but if it's just a mundane like I don't need any more shoes or clothes or
Andrea's not here. She was,
I don't need any more. There's not too many material things out there that I need.
Yeah.
But if I need, I love golf.
Yeah.
And if there's a new driver,
Well, there's
that is going to make me enjoy hitting that ball way more, then that's going to create a lot of value in my life. Then I'll really consider that particular
But
purchase.
I could push back on that too, though. I like hypothetically say like, oh, well, you already have a $500 driver. Like, is this new one really going to maximize that much?
Yeah,
or
but
do
I'll
you
just sell
or do
that
you
other.
just
I'll
want
sell
it?
that other driver.
All right. So for
And
you,
like,
you make. I'm just trying to put it in comparison of, for you, like a couple $100 is nothing, right? But just like extract that out to a higher level purchase or something where maybe for you it's not much, but for the guy who's making $40,000 a year, and he's got 2 kids and whatever, getting that extra driver, it's only an extra $100, but does he need to think in his mind, like, am I really getting the right value? Is this really where I should be spending my money
Well,
on?
all purchases are subjective to the person's income, right?
That's what I mean.
Like,
yeah.
like
So
the
they're-
with my, the $500 driver might be the same as somebody's $50 t-shirt. You know what I mean? It's all really relative to your amount of wealth, right? And how much value that creates in your life. Like somebody may love buying a brand new Gucci bag. You know what I mean? And if that bag, you wear that every day and you just get so much love, and it's not my cup of tea, but if a person can really just say that this bag brings me joy every day, I don't see it, but that's why we're all different people, right? You know what I mean? It's about how much value does a purchase, how much value can you extract from a purchase? If you're going to go buy something and you're not going to get much value out of it, then it's not going to be, I always have to like make sure before I purchase something, I always have a value scale and like this is going, and if it doesn't, I always make sure that I have some sort of, exit strategy from that purchase.
So I have a question for you. What about the person that they, at least they say to themselves, I'm going to get all the value buying this $5,000 Gucci bag. I have no idea how much this stuff costs.
Yeah, yeah.
I don't know if it's whatever. It's a lot of money. And they know they're going to love it. I want it. But if you did go look at their finances, they couldn't afford it. What do you say that? Like, what do they need to say to themselves, or what should their mindset be like to hold off on that urge of buying it? Because I think the way things are with society now, I mean, I don't know how many trillions of dollars of debt is floating around. People do live beyond their means and buy the things, even if it is giving them value.
Yeah, this is a serious problem, right? So first and foremost, your most valuable asset should be, this is just like, should be sleeping at night. That should be your number one goal for money. How can you use money to sleep good at night? How can
Okay,
you
I
create,
think I see what you mean.
you know, how can you create a life for yourself where you can pay the bills, you can live, your stress levels are low, you know what I mean, and you're able to have a good night's sleep because you are living in a comfortable situation. And that is your first, that should be your first priority for money. If going to, and overspending and going into credit card debt, that's probably going to cause you some sleepless nights eventually down the road. You might not think about it in the moment,
Well,
but
it
eventually
should.
when that stuff starts, you know, that stuff starts compounding, it will seep into your life. And I tell you right now, I've been there, and like, not so much with money, just with trying to like overextend and take unnecessary risks. And when you start losing sleep because you're trying to have more than what is within your means, that's not a life that I think anybody should be.
Yeah, I
And-
mean, I've been like that for me in terms of money. Where when I was a student in university, I think I was making 800, like altogether, making $800 a month on average, and then our rent alone was like 1,200. So every month, and that's not even including food or anything, right? So every month we're losing $1,000 and going into debt to be able to get through to that point. So I know what it's like to have all that compounding debt attached onto you, and you do lose sleep. Your quality of life does go down. But that for us was maybe a little bit different in the sense that we're doing it as like an investment in my education to hopefully get a better job. But it doesn't matter what the reasons for. When you go into debt, it has a huge impact on your life.
Yeah, I think a lot of people like that might think they're like, and I know a lot of people are, there's, you know, a lot of people are struggling, but I think a lot of people think they're struggling. And when they really probably have a pretty decent situation, they're just not,
They're just making bad
they're
decisions.
just, well, they have a lot of people probably have a great situation. They're just not willing to like own it. You know what I mean? Like you know what I mean? Because they're just, like you said, they want more. Like maybe they're living in a small apartment and they want a house, but at the end of the day, they don't realize that that small apartment is, some people that live in the big houses just wish they lived in small apartments so they didn't have to look after the big
So
house.
are you talking more of they don't know what they have kind of thing, or they're
Well, they don't exactly. Well, they you know, if they have, most people are like, I don't say most people, but people are that have like a simple life because of their finances allow it. That their finances, it's all their finances allow, and it's simple. But they don't look at it as being a good simple life. They think it as them falling behind the peers, right?
so the keeping up with the Joneses kind of
Well,
kind of thing.
it's just society, right? It's
Well-
like they, you know what I mean? It's like like, you know what I mean? I'm on the golf course. I learned so much on the golf course. I play with so many different walks of life, and every young kid wants to buy a house. They, you know what I mean? Like they think that the biggest way to like prove their worth is if they go get a house.
Is that still a thing now? Even though people are seeing the average house prices, it's still what you're hearing is the goal in the
I
dream?
hear it all the time from young people, like, because every time I explain to them that I sold my house,
Yeah.
and they're like, geez, we're saving up a down payment to like get a house. And I'm like, put that in the market.
I don't know how anybody could even save up money with a regular job these days to be able to buy a house. Like, what's the average house price here? It's like 650,000 or 700. Like, I don't know. It's insane.
500 is probably 500,000 is probably like your
Yeah.
baseline.
So then you're looking at
to
20%.
get for like
So-
for an entry level home.
yeah. So then you have to put 20% down to not get insurance. So that's $100,000. How are you going to save $100,000 if you're just making an average
I
salary
mean,
job?
like, you know,
I don't
it's-
understand. Like
it's tough. That's why.
and
The
then they
thing about
save
it is like
What's the house price
people
gonna
are
be in-
people are saving their money for this house purchase when it could be invested in the S&P 500, compounding 10% a year. You know what I mean?
Yeah. Well, hopefully they're doing that even
You
as
know,
they're
so
saving,
like
but-
with that being said, like, you know, like everybody spends money in different ways. Everybody grows wealth. Everybody's lifestyle is different. But it's all the same story. Like, you know what I mean? Like, however people want to improve their lifestyle, it's all different. You know what I mean? But it all costs money for the most part when they say they want to improve their lifestyle, you know. And the best way to put it is that you should not grow your lifestyle more than your wealth is growing.
Yeah.
You know what I mean? Like, but that's not the case, right?
But it's hard to do. It's like even what Kevin was saying, you know, like you know, from what I know from Kevin, like he's doing well. He's got a great job, and you know, he's got a family, and you know, they're making money. So I don't think they're hurting. But then lifestyle just creeps in. So like, what is it then? Like, I know you were saying this, like obviously just don't spend more money than you're making. It's pretty
Yeah.
simple advice, but it's also doesn't resonate with people. So is there something else about, like the mindset? 'Cause I love what you were saying about think about like what your goals are for
Yeah.
maybe not even so much for money, but just for your lifestyle. And then almost reverse engineer it with what you do have to make sure that you don't go beyond that and make sure that like I love what you're saying is that I forecasted out if there was a crazy bear market and then things were downturn for a long time, like we'd still be just fine. And then like I like that idea of even if you're not making a lot of money to just figure out what your life is going to be like, even so that you can enjoy it even today if you can, and then live beyond that means so that you can still grow. And if things do happen, you could still be okay, whatever that number is.
Yeah.
Because there are people that are happy making
Well,
$30,000 a year, and people
Nope.
are miserable making $3 million a year. Like,
of course. Yeah. Well, that's the thing. The hardest thing to do, which is the right thing to do, is just to live small and grow big. So you like get into a situation where your overhead is so low that where you have an abundance of money to save, and you want to increase your savings, and you should be investing your savings. You should not even think about increasing your lifestyle until you have a really nice nest egg put away.
have you ever read? Sorry to cut you off here. Have you ever read like Gordon Ramsay and his book? And Gordon Ramsay, he's the chef. Sorry, Dave Ramsey.
Dave Ramsey.
Yeah.
Yeah.
Have you know?
Yeah.
him?
I've listened to a little bit of his
baby
stuff.
What do you think about his thing? Because his first thing is just have an emergency fund of $1,000, and then it's save up like I think it's three months of salary in whatever, and then of course, but before then it's like I don't know when pay off debt is. I think maybe they're like right after the emergency fund, get that, then pay off debt, then save up money. But do you think something like that is that kind of what you're thinking of?
Yeah. So
Of,
most
like,
people will do the opposite. Most people will start out by going into debt, right?
Mhm.
Like via student loans or credit cards or taking out a big mortgage. You know what I mean? Like you should
I could
start.
talk for days about student loans.
Yeah,
but-
you know what I mean. So they're starting at a disadvantage, right?
yeah.
And that disadvantage can really weigh on you, right? It can make you feel, so they just keep playing the debt thing off, paying it, like, you know what I mean? Like at the end of the, 10 years, the amount of interest you pay on all that debt, you could have just put all that money into the S&P 500 and let it grow. Not too many people think like that.
Yeah.
Because they don't want to wait. You know what I mean? They want everything now. So, and that's what credit does. Well, I can get this now with credit and I can just pay it off as I go. They don't think like that until everything starts compounding. The interest payments keep going on and on and on. And next thing you know, what you should be doing is the opposite. Instead of making interest payments and debt payments, you should be paying into a fund, growing your wealth
For yourself.
first.
Yeah.
But nobody really does that why? Because nobody can think in the long term.
I think people also don't understand. Like when I was a kid, 19, I had go away from school. That's the next thing to do. Take out a loan to do that. Borrow $10,000 a year for 4 years. For in my case, 6 years, and that's just the way to do things. I never even knew. I didn't even know what the hell the stock market was. Like back when I was a kid. So there's no education whatsoever. And for me, at least the way that I was raised and the way that things came up was like literally high school and then go to university. That was like, it was just what you did. And there was no even thought of like, oh, well, I don't even have to do that. So then it's like, yeah, right off the bat, you go off into debt. And it's brutal. And I know for me, so I was 19, went off to school, started student loans, and I just finished paying off like my last student loan, I don't know, like a couple of years ago. So like 42 or 43 years old. So over 20 years, like almost my whole adult life, having some kind of debt because of student loans. So but obviously now I would never do that, but there's no education. So I don't know if I say it's people don't do it because they just don't want to, but I think a lot of people don't know.
Yeah.
Young kids anyways.
Yeah, of course. No, it's unless they're being introduced. Well, it's a lot easier now with social media, YouTube, to be able to find the stock
I guess,
market.
yeah, the information is there.
But the information that the young people are probably gravitating towards is the fast, quick
Oh
money,
man,
right?
I think that's huge on TikTok, where it's just all these people are, number one, all that stuff is a scam because everyone's like, I'm going to teach you how to make money, and that's their job, is like they just sell that. But it's all about get rich quick, or this is what I do to make sales and all this kind of stuff. And it's like, it's all quick, right? It's almost like in fitness industry. It's like, well, here's how you can lose your 50 pounds in 50 days, and then that's it, right? So
Yeah,
it's,
and that
everyone wants it right away.
and that part of society has always kind of been relevant, but it is compounding at a way faster rate than it ever was because of social media. We're in this
Yeah.
new digital world where we see way too much. There's too much influence. There's way too much information, but at the same time, it's great to have it. Like it's net positive. And that's a hard thing to say
Ooh,
because
that's
I'm telling you right now.
nice.
Let me finish my point.
Okay, yeah.
it is net positive to have all this information out there because before
world.
I'll tell you right, you just need to know how to be able to sift through it.
Yeah.
Because I'll tell you right now, the amount of information that anybody can go and find on the internet, they can do anything they want with all the information. It's just you have to be able to find the right sources. And you need to be able to be smart. Like I know it's intoxicating to want to day trade. It's intoxicating to want to take these big risks. It's intoxicating to want to put yourself into debt to get things right now.
Yeah. Well, it's gambling. I almost like everything's.
Well, not even about investments. It's just you want this purchase, you want this vehicle, or you want this house. So you're willing to, put yourself into debt because you were accepted for a loan, but you know that you basically can't afford this house. Maybe you don't know you can't afford the house, and that's the biggest problem, right? A lot
Or
of people
you just think that,
a lot
this is what people
can't-
do.
When most people get into a house, they don't think about what that's going to cost them with phantom costs throughout the year.
Yeah.
You know what I mean? We don't need to touch on houses right now, but let's just talk about like investing. Let's just go into investing and what it takes to be an investor.
Yeah.
And the greatest asset of any investor is time. And and you think that and I have to give my flowers to people who invested 20 years ago and who have just let their investments sit for 20 years because those people are the true OGs. Like they've been through, if you've been invested for the last 20 years, you probably witnessed up to 8 massive pullbacks and crashes.
Yeah.
And you had to stomach those every time to get to where you're at. You stayed on the ride. Now that is what I'm trying to train myself to be. Like I'm a long-term investor and I've only really pivoted into this long-term investing. I've only been into it because I was more of a trader for the beginning of my journey. Now I'm strictly in trying to build this mindset. It's only been 2 years and I'm already, understanding how hard it is to go through the markets up and down. Me and you were just talking about, you were saying that the crash in Korea could be foreshadowing a crash coming up in AI stocks, and you could be right, but it's of course it's going to happen at some point.
Yeah.
But for me, I have to stay on the ride because I don't know if that's going to happen this month, next year, or 5 years from now.
Yeah, who knows?
Legitimately,
Yeah.
like this market could just consolidate and keep rising for the next 5 years. I know lots of people that are pulling their money out of the market right now because they think there's a crash on the rise.
Yeah.
And then those people could be wrong for the next 5 years and watch the market just rise.
Yeah.
For the next, you never
You never
know
know.
when these things are going to happen or how it's going to happen.
That's why it's like, I think Tony Robbins talks about this. It's like, who cares what it is? Just put your money in, like whatever you can afford, like once a month or whatever it is.
And
then
hold on
just
to it.
dollar cost averaging, I guess is what it is, right? It's
Yeah.
just like, you just
And
stay in it.
you
As
have
long
to-
as it doesn't go to zero.
The thing about it is like, like you have to stay on the ride.
Yeah.
Like if you, some people like this is my biggest issue is that when I first got into the market, I was going to be a long-term investor. Like it was just, I'm going to be long-term, no problem. And then you go through your bouts of volatility, you see the crashes, you see the ups and downs. So your mind gets fixated on, well, I think this is going to crash again because I've lived through these before. So I'm going to time this.
Oh,
this
you're
time.
going to try to. I see
You're going to
what
start.
you
You're
mean.
going to.
Yeah, that's
I think
interesting.
a lot of people want I think a lot of excuse me. I think a lot of people want to be hands on. I think a lot of people want to take control
Yeah.
of their investments of the market, and like these so-called professionals, these pros that want to come on the talk shows and the podcasts on business television
Yeah.
and get the airtime, giving their 2 cents of where the market's going to go, market callers. And they've been proven that market calling is impossible to do.
Yeah.
But they still go out there because they need to promote their funds.
Well,
right?
that's what it is. That's their job. That's
Yeah.
what it's like. This is how you're going to make your money. But and pretending that that's how they make their money, but it's not. They make their money
Yeah.
by telling you. It's like, for me, I think of investing. The only person that I would ever like trust would be like a Warren Buffett or Charlie Munger. I mean, he's not alive anymore, but you know, like those types of guys.
Now,
that
why
have
would
been-
you trust those guys?
Yeah, well, their track record
Mhm.
of what they've done throughout their whole careers in
Mhm.
terms of, but they're like I like their thing of investing. It's like I buy it and I just buy it for life and I just hold on to it. Like they're
Mhm.
not like trading and all that kind of stuff. So I'm just saying, like, if I saw them, they're like, hey, I think this is a good stock. Like if I was to do that and trust someone, those are the guys that I think I would trust. If they would recommend like what to buy or whatever. But
Yeah.
even for me, I don't even buy individual stocks per se. I have a couple, some of them are individual, but it's really like just index funds and just put into it every whatever I can, and then that's it, and just leave it and just assume it's just I'm just gonna keep it there for forever and not want to sell it. So,
So
that's my mindset personally, because I don't care what the portfolio value is, the numbers. So I don't even look at it. I just
so
put
let's
the money
ask
in.
each other this question.
Yeah,
Why is it so hard? And I think it's hard.
yeah.
Why is it hard to be a long-term investor?
Do you want me to answer that question for me?
Let's just
or
answer.
for-
Let's just talk about it. Like, because I think it's hard. Because like it sounds like I can just say every time the market goes down, that's what I have to say to myself. I'm a long-term investor. But when that market goes down, it's hard to think like, oh, if I would have sold it, I knew it was high. I knew we were going to come into a correction. I knew things were going to happen. Why didn't I sell some? Why didn't I take some off the table? Like, you know what I mean? It's like, it's hard to living through the crashes, seeing your portfolio be up so much, and then watching your portfolio go down, temporarily if you're a long-term investor and you believe in what you invested in.
Mhm.
Those types of situations are not easy to deal with.
Okay.
And dealing with those situations is where the real skill, and it's a skill to be a long-term investor. It's easy to do fundamentally and practically because you do nothing, right? It's easy to physically do nothing, but mentally it's excruciating. And that it's a real skill.
Yeah.
And I think true long-term investors need, like your Buffetts and your Mungers, and
Yeah,
there's
yeah.
lots of people out there.
Yeah.
They really deserve their flowers, and they deserve that. The real, like, I had a buddy, just case in point, who's been in silver for 7 years.
Okay. Yeah.
And
Does he actually have like bricks of silver at his
yeah,
house?
he
or
had
whatever?
physical silver.
Yeah, yeah.
And silver went on a rip last year.
Yeah, okay.
Like, and he sold some and took his kids into Disneyland. And I said, I went, put my hand out, I shook his hand, I said, that's where it's at. I said, you've been in that for 7 years, and you got your euphoric rally. Like, you know what I mean? Like, it's like when things happen like that, when silver goes up 300% in like 5 months,
Yeah.
you take your money. Those are situations where you've put your coins in this slot machine,
Yeah.
and you just kept pulling and pulling and pulling,
And you got the
you got the
jackpot
jackpot. He didn't sell all of it.
Yeah.
He just sold some and took his kids to Disneyland.
Right.
Right. And I said, you know what? Because that's long-term investing. He sat in that for 7 years. That's a long-term investment. It doesn't have to be 20 years. It doesn't have to be 50 years.
Yeah.
But that's a long time to be in investment and watch silver go nowhere for 5 years. You know what I mean? Like, it's
Yeah.
basically dead money. And then it had its moment.
Yeah.
You know what I mean? But he had to sit through all that, and he sat through it, and he sold silver right at the top.
But I wonder, I have a couple points I want to bring up, but I wonder what would have happened to him if the opposite would have happened, if he would have sat on silver for 5 years and it went down 50%. If he would have been willing to ride it out even longer.
Well, he did ride it
or-
out, because if you watch the chart of silver,
No,
you
but
bought,
did it stay flat though, and then it went up?
Oh,
That's
yeah,
what I'm just saying. Like if he bought it, and then it went,
I don't have the chart
Yeah,
with me
okay,
for
yeah,
silver, but it was an underperforming. It was not
Yeah.
it was an underperforming.
yeah.
You know what I mean?
The only reason I say that is because I remember so many people where something would happen in the stocks or whatever. And I think this was when 9/11 happened. And then I go to work the next day, and everyone's like, I pulled all my money out of the stock. I'm like, what are you doing? It just went down like 30%, and they pull it out because they're afraid to lose more. So I'm just thinking of that, of like, because some people, I think, I don't know if you'd
Panic
agree with me, is that they, when there's something bad happens in the market, they panic and they pull their money out
Yeah,
because
well,
they're like, I don't want to lose more.
Yeah, this is
You
a
know what I
point
mean?
that I want to get to. So with that, what you're saying there, that is to be able to withstand the downfall and
Yeah.
have first of all, you should have conviction in whatever you're buying into, that when it goes down, you will never sell because you have conviction for the long term. So whenever I buy an asset, I have to tell myself I'm willing to sit through the pain of this asset
Yeah.
because I believe in the long term. And I know every asset that I buy, like Bitcoin, case in point. You know, I've been in Bitcoin for 3 years and we're going through our pain cycle right now.
Yeah.
I believe in the asset long term. So I'm doing the work
Yeah,
right
yeah,
now.
now's not the
right,
time.
Right now, no, right now, like, you know, it's been painful for the last year, right? But that's the work.
Yeah.
Like you
the
look at
work is not selling.
the people that, so there's people that, one of the big reasons why Bitcoin's pulling back is because a lot of OG investors from 2018 bought the bear market back in 2018 and got their 10-year returns, and now they're cashing out. A lot of them are, you know, 50, 60 years old, and they're taking their money.
Sure.
And that's what's contributing to this bear market, right? A lot of people that rode it from, you know, up to like 1,000%, or a lot of them are taking their profits, right? That's what kind of started this bear market.
Yeah.
And right now, so I'm in the beginning of my Bitcoin journey. So now I'm in the pain process of having to sit through it, wondering, is this thing ever going to appreciate? You know what I mean? The doubt and the fear, like it's there, right? But
Yeah.
that's what I have to, that's my work. That's what I have to do.
Yeah.
I have to make sure that I do not panic sell out of this investment.
For sure.
You know what I
Yeah.
mean?
And that's what I'm saying. Cause I know you're doing the work, and I think you're saying you have that right mindset of thinking that it's a long-term investment. I just think a lot of people don't have that mindset, because a lot of people, they let the fear and the panic overwhelm them.
I've been
And
there.
then they
I've
make
it.
the wrong decision.
I've
right?
done it.
And people make wrong decisions all the time. It's
Yeah.
just what it is.
So that's why
But-
I'm saying that the mindset of a long-term investor, it's not easy.
yeah.
Like it's easy, like, you know what I mean? Like it's not easy because if you're a long-term investor, you have to sit through the good, the bad, and the ugly, right? And honestly, a lot of it is like bad and ugly. Like ugly being just like consolidation and choppiness
Yeah.
and a lot of this, and then
No growth in 10 years.
yeah, and the bad is like, you know, the crash.
Yeah.
And like everybody, you know, when the market's crashing, nobody's telling you that this is the buying opportunity of a lifetime. They're telling
Yeah.
you that it's going lower, that it's going to get worse, that the stock market is dead, that everything is dead.
Yeah.
It's done.
No one's
it's
doing that
dead.
anymore. Yeah.
I've been through it 4 or 5 times already, and I've seen it recover every time.
Yeah.
Every time. And then you go back to history. We've been through world wars. We've been through unprecedented inflation.
Yeah.
We've been through financial crises. We've been through viruses.
Yeah.
And the market will always find a way to rebound.
Yeah.
And that's what gives me confidence in the long term.
For sure. Yeah.
You know
for
what I mean?
sure.
Because
So-
history's saying if anything does happen, then it's an Armageddon type of situation.
if it gets
and then
when you really lose everything. Yeah.
yeah,
Exactly.
and then, you know what I
It's
mean?
like,
Not saying
whatever.
that can't happen, but that's what my
Yeah.
biggest risk is.
Yeah. So it's interesting you're asking me about this, because you're saying like, what do I think
Yeah.
about the long-term investing? And I think you and I approach it completely differently. And I think there's a difference between, because that's your job, you're an investor. For me, like I'm a business owner, and the investing that I do, like for me, I don't have to work at it. It just is. Like if I have extra money to put away that I know I'm never going to need, you know, barring some kind of crazy emergency, I just put it away and I don't even think about it.
Mhm.
Right. So for me, putting away $500 a month, I put it into the index funds.
Mm-hmm.
I don't even look at it. So it's not work for me per se to even think about it, or to like, I don't care what's going on, because I'm like you, where I know the market's going to go up and down. I can't do anything about it. I'm not trying to time the market for anything. I'm not saying, hey, my bank stocks are at the highest it's been now forever. I think I'm going to sell it because I think it's going to crash, and then I could buy it even when it's lower. I don't think anything of that. It's just like, this is just what I'm going to have for when I'm 20 years down the line or 30 years down the line, when I want to sell it or give it to my kids or whatever. I don't care, because I know in the long run it's just going to go up.
Yeah.
So, but it's not my livelihood, right? So like if it does go down, I'm not like, oh shit, how am I going to buy bread tomorrow? Because like my business is what makes my money. You know what I mean? So it's a little, I think for me, I could be wrong, but this is just for my mindset, is that it's a long-term play. I buy it and I'm just going to keep it for forever and just let it compound and grow.
But what
And that's it.
percentage of your wealth
Well, it's very low,
is,
right? So
is
that's
in the
thing.
market?
Right now, my percentage of everything is like, I reinvest everything into my business.
Mhm.
So that's what it is right now. So I have stuff for the kids, and you know, but for us, it's like very low because I
Okay.
invest in this as opposed to that
So,
right now,
yeah.
right? So
So like I think that's a big attribute to why you don't pay attention to it too much, because not saying it's not a meaningful amount of money that's going to affect you when it goes down, and it's probably not a meaningful amount of money that's going to affect you when it goes up either.
well, it can like
Yeah.
some stuff has gone up, and there
Yeah.
all of a sudden this year it's up like 13K, and it's like okay, great,
Yeah.
but like okay, I'm not going to pull it out anyways, right?
Yeah,
I don't
yeah.
need it. So I guess I'm just saying like even if it was like I mean if it was millions of dollars it'd be a little bit of a different story, but if it was like $250,000 or whatever, like it's not because it's 5 figures. I'll just be real. It's not a lot of money. Well, for me, I know probably for other people, but if it was 6 figures, close to 7, I still just look at it as that's not what I'm using to live. Do you know what I mean? Like I pull my salary from my business. I have whatever I need to live in my comfortable, like I've put my own framework as to what's a comfortable lifestyle for me, and everything else is just gravy. And if I am going to put it in there, then it's gone. I just my mindset is like, it's gone. You're never going to see that again. So it has to be an amount of money of like, just if I was to go to the casino, we're going to go play some poker, or we're going to go golfing and pay the money for that. That's what it's like to me. It's gone. I don't need it. So I'll never be like, pining
Yeah,
for
and
it.
I think that's the biggest thing you're saying there. It's an amount of money that you're not attached to because
Yeah.
it's not your bread and butter. Another thing is that if your business, let's look at your business as a case point.
That's a
If
big
your business started losing clients
Oh yeah.
and you weren't getting any clients, and then that started like trickling and that started compounding.
Oh yeah.
Then that's a different story, right?
100%.
So it's all about the impact it has on your life.
But that's what I
right?
mean, right? Because
Yeah.
your life
But a lot
is
of people,
investing in that
have
sense.
like their retirement savings in the market, right?
Exactly.
And when they see that their retirement savings is
Is
going
at
down,
risk.
they start thinking, oh my God, my runway to retirement is going to be a lot longer. Even though
Absolutely.
that could rebound. And I've seen snapbacks so quick that
Yeah,
like just they rinse you out. Like I know lots of people that probably sold their retirements
Yeah.
because they were scared of the market.
Well,
You know
even
what I mean?
in the COVID crash in 21, like it crashed hard, but then it rebounded like, what was it, like a few months, and it started going crawling
And then we had
way
one of
back
the,
up.
then we had one of
Yeah.
the most euphoric bull runs of history.
Yeah, exactly, right?
You
So,
never know.
yeah,
That's the thing. That's why you stay on the ride.
Exactly.
I
Yeah.
remember.
But I hear what you're saying about like people that they're retired. Like if your livelihood is based on it, of course you're gonna have that fear and those palpitations. Like, oh, I could lose everything. I could lose a lot. So of course it's stressful.
So I think some of the most important things that when you're looking to invest, and I think everybody needs to, whether you're investing in yourself as an entrepreneur, that's one way to invest. You're investing in yourself. You're
Yeah.
investing in your business. That you're investing, right?
Yep.
You're but then
I agree.
people-
I love thinking about it that
yeah,
way.
that's investing. But then there's the other way where people are working your typical type of job,
Yep.
and then they need to have another source to create wealth, because you can't just you can't save into wealth because inflation is going to kill your savings. So
Sorry, you mean just like, I
well,
just put my money in the bank.
know,
Yeah,
I know
100%, yeah.
people. I know people that are just saving cash. And they're
Yeah.
just saving, and they're just growing their savings, and they're
Yeah.
losing
You're
money.
you're not growing
they're,
your
they're
savings.
losing 2% every couple of years to inflation. Right?
Even more than that.
And I try to explain to some of these
That
people. I
blows my
said
mind.
that has to be
Don't do that.
at least put it into a cash account where you're getting at least 2% for it.
yeah.
But some people like investing. It's just so hard for them to comprehend because it's
They've been burned before.
there's a lot of resistance to like
Yeah.
putting your money at so-called risk, right?
Yeah.
And a lot of people, like for me, I kind of jumped, I jumped off the deep end right from the get-go, and I learned the hard way, but which is great because it got me to where I'm at now,
Yeah,
and
yeah.
I still have the most important quality of any investors. I still have time. You know what I mean? I have a good 20 years of growth, and I can grow till 55, 65 with no problem. Like I have tons of time to let my investments flourish.
What's your plan? And say you let yourself grow till you're 65,
Yeah.
right? And then you have whatever, I don't know, let's just say you have 10 million. Like what's your plan? Like are you one of those people that think that I'm going to die with zero? Like I don't know how you can't time when you're going to die, but you know what I mean? Like are you going to at some point be like, all right, now I can spend the money? Do you have to
No, don't worry about that.
like, do you know what I mean? Like, are you going to be like, okay, now I've made the money, I'm at this age, now I'm going to go crazy with it? Like, do you
Yeah,
have any
I mean,
thoughts?
so for the case point of me, like it's this is a conversation me and my wife are having, like, on a weekly basis, right? Because we want to, like, obviously I'm big on this die with zero phenomenon.
So you are, okay, yeah.
Yeah,
Which
so
it
but
makes
I
sense.
don't want to have $10 million. It's
Yeah.
not gonna be $10 million because I'm spending my portfolio as I'm living, right?
Right.
So if I do create $10 million of wealth in 20 years,
Yeah.
a lot of it will be spent.
Yeah, but there's, like you said, there's the balance though, right?
There's
Because
the-
you
the
don't want to
balance,
spend
but
more. Like,
yeah, exactly.
when's the tipping point?
And I try not to think in like, what would I do if I had this much money, blah blah blah. It's kind of a mind trap.
but you
what I
are
mean?
thinking about, like you said,
I'm
those
thinking
conversations.
we
you're having
we have a 5-year plan
and-
where we want to see where our portfolio, where things can get to in 5 years, and then we want to be more conservative with our investments. We want to be, less volatile.
I was going to say, would you put
we
it
want
into
we
the
want we
more-
want less volatility, more predictability, more we probably want to be in more steady ETFs. Like we have a little bit of riskier stuff in our portfolio
Yeah.
right now. Some AI stuff, some crypto.
Yeah.
With just Bitcoin, not crypto, you know what I mean? And
Yeah.
we're heavy into tech. I think that we are in a technological revolution that is going to last. I'm happy I want to be in tech right now, for the foreseeable future. I just think that this momentum we have with AI, I think that we're going to see some of the craziest growth in technological advancements that in the short period of time that the world has ever seen. Like the Industrial Revolution is not going to have anything on this. We've already been in a technological revolution, but I think that it's going to compound at a way greater rate than it's already
Yeah.
had.
That's
It's already
we-
been.
Go. Sorry.
It's already been compounding pretty fast, but I still believe that, and it's going to be a wild ride because
Yeah.
when things move fast, as they have been, that's when the fear starts kicking in that we're growing too fast and the bubble talk starts coming out.
Yeah.
And this is why it's hard to be a long-term investor, because things can get euphoric, and you could say, are we in a euphoria stage? I mean, whenever anything goes up sharp and fast, with the bubble euphoria talk comes out, and this is where it's hard to be a long-term investor. You have
Yeah.
to say, because you don't know where the ride starts and stops,
Mm-hmm.
or where it takes a break and then maybe retracts. There's been times where I said to my wife, like, I think we're going to pull back from here. I'm not doing anything, but I think this is where we're going to pull back. We have plans in place to prepare for that we take advantage of when the market crashes. Like we've set our business up that we have like a lot of resources to take advantage of when the crash. So we like the crashes.
Do you mean like thinking of the stuff that you're going to buy? Once
Yeah,
things go down?
we
Yeah,
take
yeah.
advantage
Yeah,
and
I hear
buy.
you.
We have resources that we
Yeah.
use when the markets crash. So that's the only way I can live through this, is by having resources to take
Yeah,
advantage of when the
and-
market crashes. But I've been wrong in my mental predictions that I think we're going to pull back. Sometimes we just stall out. We kind of consolidate and drop a little bit, and then we kind of resume higher. So you never know. I mean, we've waited for an opportunity to buy into the market since last October, and I raised some cash, and I waited, and I took till April of the following year for me to get a decent spot where I thought it was a good time to buy into. That's quite a bit of time and that was just all chop and consolidation. So that was October till like the end of March, till April, right? So that's a long time for the market to kind of figure itself out.
Yeah.
Things can happen quicker, you know what I mean? But right now there's a lot of bubble talk, you know what I
Yeah.
mean? Like things are gone up too fast. We're in an AI bubble, and that's what happens. And that's a skill of being a long-term investor, is how to live through these types of narratives.
For sure. It's funny too, because we can talk a lot about this later, because there's one way to look at the whole tech of how things work in the stock market. And then there's also like, what does businesses and companies are using the technology for, and like how this is going to get incorporated into our lives. And I feel like there's some disconnect between, what people think the businesses are going to do, but what are the real world applications? Because I agree with you that who knows where things are going to go, where they're going to have like androids and robots and tech. Like we're going to go super, super fast. But how does that, like, how do these companies make products that consumers themselves are actually going to want to buy and businesses are going to use. So it's really interesting, fascinating topic. I talk with lots of business owners and find out like how are they using AI, what they want to do. And I think a lot of guys were really high on it. Like, yes, I'm going to use this because it's going to take over my staff and blah, blah, blah. And now people are like, no, it can't really take over other people, but I'm going to use it to augment what people are already doing. So they're thinking it's not as useful in the current state as it is now as I thought it was going to be. So it's really interesting to know that, like, you know what I mean? Like, there's a difference of what the stock market says a company's going to do versus what people on the ground are going to be actually like using the technology for. I don't know. I just think it's fascinating, and nobody can tell me what. If someone comes to me and says, "Yeah, I know exactly what's going to happen with this," that I'm like, "You don't know shit," because nobody knows what the hell's going to go on with this stuff, because it is this unprecedented thing, and it's crazy. It's wild. It's fascinating to see what's going to happen, and it's super exciting because the tech breakthroughs are just. It's like every day. It's like a new tech. It's amazing. It's
Case
like what
in
it can
point,
do.
like I want to be in the market for the next 20 years. And like when obviously I'm going to be in the market for the rest of my life, but I
Yeah.
want to be especially in the market now for the next 20 years in growth.
Yeah, I think it's going to be volatile as hell, but it's going to go.
I want to be in,
it's gonna
like,
go up.
obviously as I get older, I'm going to be obviously right sizing my portfolio to be more conservative, to be less risk adverse. But
Yeah.
right now I want to be on the gas pedal. I want to be in growth. I want to be in growth. I want to be in the growth market.
Yeah.
And what's going to happen? There's no point, and like there's all the cases have been made. AI is going to ruin the world. AI is going to improve,
Save the world.
Save the world.
Yeah, exactly.
It's all, you know what I mean. But what I think it really comes down to is it creates efficiency. It creates, if every business gets leaner with AI, and their bottom lines grow. Every business.
Yeah.
Every business is using AI to be more efficient and to grow their bottom line because their costs will go down, their labor goes down.
Yeah.
You know what I mean? And that's every company is going to feel that, which is going to improve the bottom line of all the companies in the market.
Yeah,
right.
I think some of the bigger companies are, but from the smaller companies, like the small and medium guys that I'm talking to, they're still trying to figure that out.
Well,
And
we're
they're
in
spending the money on it, and they're actually losing money, and it's not getting the efficiencies that they thought it was. So that's what I mean. It's fascinating, and the companies that have the money to pour into it, for sure, makes sense. But the ones that don't have that money, like the smaller, medium-sized guys, they're like, I don't know how I can make this fit and how I can make it impact my bottom line in a way that makes sense for me to pour in the money, because they don't have millions of dollars to spend on this kind of stuff. So that's where I'm like, it's fascinating to see how it's gonna.
When we're going through something so transformational like this, there's always going to be so much controversy that comes with it, because people get excited and then people get nervous. People get excited and then they get scared. Case in point, today Tesla and Google are both down. I think Tesla, when I checked it last time, Tesla's down like 13%. I think Google's down like 8% because they're spending too much on AI. That's the headlines right now. They're spending too much on AI, and you know that's what the market does. They create, the media creates these wild.
It's not based on any kind of.
They create
logistics.
these headlines. they flush out all the scared money, and then people are the big money's waiting there for when all the scared money gets out of it, and they're going to scoop these companies up. 10-15% cheaper, because
why not?
They see the future, and they're spending now for all these, for all the revenue and profits that these companies are going to make in the future. If it translates into more revenue and profits, we have to see, but they see the risk reward. And if they're right, then what people are doing right now, selling out of these companies, is the wrong move. But that's the problem when something so transformational is happening in the world. People are excited and then people are scared. You know what I mean? Because it's so nobody knows which way it's going to go.
But at the end of the day, it is going to go, because just like when the phones came in, it's like people would resist it. It's like, oh, I'm still going to base my business off the phone book. It's like, where are they now? They're gone, right? So like you're going to have to.
Well, that's the thing too, right? That's why it's important not to play. This is one big thing about, and I'll say being a long-term investor, and I learned the hard way. Index funds it's not just a safe play, it's the smart play, because you do not know what company is going to do the heavy lifting in the market. Right now, I know there's a lot of people that just are so high on Tesla, and I was in and out of the stock throughout my life, and I got away from stocks. I think I stopped buying stocks about 2 years ago. And, you know, looking at what Tesla's done, I looked at the chart, me and my wife, it is back to where it was in 2021.
Yeah.
Like that's almost 6 years of dead money.
Yeah. And they don't even pay dividends, I don't think, eh? Because it's a tech stock.
Yeah, it's a tech.
Yeah, it's crazy.
So that's case in point. But I'm in an ETF that holds 20 stocks, and Tesla's one of them.
Yeah.
And my ETF is, you know, I think I'm up like 30%
Well,
for the year.
Exactly, because it all
because there's 5 stocks in there doing the heavy lifting.
Right.
None of the, and I can't predict which ones they are.
Yep.
You know what I mean?
That's why, ETFs. Like, if there's any takeaway for anybody, like, don't try to time the market. Don't try to play the market. Just dollar cost average your way into ETFs, which is just betting on the whole market. And then just let it be. Let it ride.
And you have, and you know, it's kind of cumbersome because, like, you know, one of my biggest holdings is down like 3.5% today, right?
Yeah.
But I've been down before and it goes up. Like, you know what I mean?
You're not selling today.
I want to see where it's at in 20 years. I'm pretty sure that, you know, these ETFs are all going to grow within 20 years. And it's like, you have to be able to, it's tough because you just want everything to like stay flat or go up.
Yeah.
You know what I mean? You don't want to take the rides down, but you know, I'm getting used to the rides down. It's just part of the process, right? I don't look at my portfolio value ever.
Well, there you go.
You
That's
know what
good.
I mean?
Yeah.
And like, I don't have a clue what my portfolio value does. That can really mess with the mindset.
Wow, for sure.
I just know that, you know, I'm in for the long term, and there'll be a time where I'll have to like readjust and take a look at it. But I all I think about is the long term, and then I want to be able to tell myself after messing around for 5 to 6 years that, because I wish I just would have bought into the market with all my money, everything that I could have got my hands on. I wish I just would have put it in there. Hindsight bias,
back
obviously.
in the day. Yeah.
But now I have the chance to.
Still got time.
I have the chance to do that, and I'm only in the first inning of the process, and it's already dealing with like, oh, I wish I would have done this or I should have done that. No, all I want to do is just hold for 20 years and see where it's at.
Yeah.
And wherever it's at, I don't care. Just as long as I held that long to get whatever it could be.
Yeah.
That's the goal of the long-term investor.
Yeah. I llove it. That's a great place to start. And one thing I'll say too, you know, sometimes things go up and down, but that's like a roller coaster. The funnest part of a roller coaster is when you're going down, right? Put your arms in the air and just
That's a good. No, it's.
But hey, it's part of the ride. Part of the thing.
I mean, I like the downs create opportunities, right? Like
That's
I said,
true.
it's
a good way to think about it.
I have to, you know, and even today, I was kind of like looking at the market, and my wife's like, "Oh, it's going down. That's good, isn't it?" And I was like, I said, yeah, it is good.
From a certain point of view.
No, well, it is, because you have to have that mindset, because that's where all the opportunity is, right?
Yeah.
It's hard to be contrarian in the market and going against the grain, because that's what being a good investor is, you know. Buying things on sale is what creates value, right?
For sure. All right, man. Got to run.
Okay.
Great talk as always.
All
And
right.
we'll pick it up next week, or we'll figure out where we're going to go with this. But always love having these chats, man.
All right,
It's
buddy.
awesome.
That was good.
All right, guys. Thanks everyone for tuning in, and we'll see you next episode. All right, we got to get Andrea back.